Okay, welcome everybody to the breakdown. I'm your host, David Canellis. The sun is shining. I'm a little bit sick, so if my voice is a little bit more nasally and sniffly than usual, I do apologize. Hopefully you can bear with me. We are looking at interesting stuff happening across crypto this week. We're going to be looking at the launch of MegaETH, and points campaigns and airdrops and everything of that nature. We're also going to be looking at the state of the DeFi bailout, DeFi United initiative to plug the losses associated with the Kelp DAO attack. We're also looking at Meta stablecoins, enabling stablecoin payouts for certain creators. And we're also going to be touching on the Blockworks fundraise and a rebrand. So without further ado, let's get to it. Okay, so let's start with MegaETH. When I talk to people, I mean, this is one of the most projects that people are the most excited about to see what happens with the market response to MegaETH. And for those who aren't really familiar, MegaETH is a layer 2, but it's really taking the centralization aspect and really running with it and making a point of it, in that there's just one sequencer node, so there's just one machine that's processing all the transactions, and there's some other things about the block architecture that allow it to process transactions ultra quickly, but it is really centralized. But that's kind of the point. If we can't run a lot of these consumer grade apps on at least Ethereum as it is, then you might as well just throw decentralization to the wind and just go all in on one machine and be able to process transactions super quickly. They're trying to they're marketing it as the first real-time blockchain, which again, it's just one of those things. If you're a developer that's developing an app outside of the crypto context, why would you bother adding a blockchain if it is just going to restrict your ability to scale to hopefully hundreds of millions or even billions of users? You might as well just use the existing Web 2 stack, especially if you also are a corporation that needs control over that stack. But MegaETH is at least presenting an option that says, well, you can still access the crypto ecosystem, the crypto liquidity, or the crypto users, but you can do so on a network that will support, or is claiming that it can support, up to 100,000 transactions per second, which I don't think that there is a chain out there at the moment that even has that level of adoption in order to warrant that throughput. But hey, we're thinking about 10 years in the future when the whole world is chain enabled, let's say that. So what MegaETH is doing, it's running I guess I want to say the 2024 playbook, or even the 2021 playbook that was, pioneered by Blast and all that, and just ram incentives down the throat of potential users, and hopefully that there is some kind of Pavlovian response to users receiving points and then a token, and then, hey, all of a sudden we're just using MegaETH for everything, and I can't even remember why. It was the points. That's the idea. So the points program launched yesterday or the day before, so earlier this week. And you can see on my screen that they have this MegaETH terminal thing. And how they're doing is they're rolling out unlocked apps over time. So I jumped on here last night, and I'm just going to click through the apps that are available. There's a Launchpad and a Dex, which is cool. There is also Arcade Finance. This is Hit One. High leverage money games built on top of real markets. So a super degenerate arcade, which we love. There is Monster, which is kind of like an NFT play, I would say. Real graded Pokemon cards, so you can buy Pokemon cards and have them unlocked. So there's a few platforms out there like that. Next Rare loot boxes is a Pokemon card on here, so I'm not really too sure the difference between Next Rare and Monster, but in any case, trading cards and Phygital seems to be a big deal for at least the first wave of MegaETH apps. Top Strike, it looks to be I guess an NBA Top Shot competitor, but just for football. Not too shabby. And then the last one is it looks to be like a trading card game. It's the season. The copy on this is fantastic, I think. MEV mechanics plus pyramidal card pricing plus collectibles plus epileptic experience plus cultural appropriation. Adrenaline rush ponzonomics that's only possible on a real-time blockchain. That sounds like a lot of fun. And then they're going to phase in the next wave of apps. What does this say? Later today, actually. So it's like encouraging you to explore all the apps that over time, and hopefully earn points. Now, I jumped on this last night and just I'm reminded how painful the UX of crypto can really be. So there's a bridge here, so we're now entering the rabbit hole, and so already, I mean, it's a little bit frustrating because we were told that the apps are rolling out, over time, but here it says that a bunch of different apps that didn't show on that screen are now live, so like Bricks, Showdown, AVE, Forge, and Chasino. I tried to use some of these, but they weren't actually live, but it seemed that way anyway. And then, I mean, if anyone can tell me what's going on here, because I actually, as you can see here, this is with my Phantom wallet connected to the MegaETH rabbit hole. I have 50 USDM, which is the stablecoin on MegaETH, and a little bit of ETH, but I can't actually send this to anybody. So if anyone, I believe it's a problem with Phantom in that MegaETH is not a supported chain on Phantom, but I can't for the life of me, at least last night, when I was doing this at 9:10 p.m., I could not see a way to transfer these tokens to anybody because Phantom effectively wouldn't let me. So if anyone has a workaround for that, please reach out to me, and then maybe I can jump on and use some of these MegaETH apps. But I mean, more generally, yeah, I mean, this is, I will say that MegaETH is interesting just because of the sheer degeneracy of the whole thing. I'm not trying to detract from what MegaETH is doing. What MegaETH is doing is it's very design heavy, and there's a lot of like ecosystem specific language. Like if we pull up the MegaETH website, you'll see what I mean. The first real time blockchain, it has all these great things, but then it's like it just collapses into stuff that I'm not really sure how anyone is meant to know what any of these things are. Showdown, Lemonade, Pump Party, Euphoria, Nectar, Dorado, Hunch Hop. But okay, and what is curious is that it is running this old playbook, and I'm going to bring up this tweet from Blockworks co-founder Mike Ippolito. Running a points program is extreme negative signal in 2026. Now, this is about a different project, Liquid, but I suppose it relates to MegaETH as well. Not sure how much data we need to see here. It's a bad, expensive way to purchase your worst customers. Not up for debate anymore. Dumb. And I do sympathize with that take. What is interesting, though, is that, I mean, I ran through the stats from the major airdrops of the past few years related to points campaigns. The projects with big points campaigns, there was Blur, Blast. These really, I would say, perfected the playbook as much as it could do in the early beginning, in terms of massive points campaigns tied to airdrops that really did convert to a lot of usage in the beginning. And then we, of course, saw that usage drop off as soon as the points campaigns concluded and the airdrops were distributed. There's Athena, Eigenlayer, Tensor, Camino, and Drift. In all those cases, the token is now down at least 85%, something like that. In some cases, like 98% in the cases of Blur and Blast. So, okay, the incentives programs did its thing. It attracted users, but those users didn't hang around, which is exactly the point that Mippo is making here. An outlier is, of course, Hyperliquid. And Hyperliquid had a truly massive points campaign and an airdrop. I have some of the stats here. Let's have a look. This was in earlier 2024. The Hype Genesis airdrop distributed 310 million Hype, which was about a third of the total supply. That's way more than what we would usually see, where there would be a 5 or 15% airdrop in terms of the supply. The airdrop went to nearly 100,000 users, so 94,000 active addresses. We don't know how many of those are unique users, of course, but I mean, close to 100,000 addresses. So that was huge. And of course, Hyperliquid has become a massive success story within the crypto space. So there is a roadmap here that at least MegaETH is, I would have to believe they have looked at and said, well, the airdrop really worked out for at least Hyperliquid. And now Hyperliquid is really changing the face of markets, especially with RWA perps and weekend price discovery. So there's a huge utility here for Hyperliquid. And, I have to wonder whether or not that usage would have been found so quickly and formalized as easily, apparently, as it has, if there was no massive incentives campaign and airdrop in order to start that groundswell of interest. The question then is whether MegaETH is equal to Hyperliquid. And of course, Hyperliquid is very focused in its mission in terms of markets and really focusing on the trading aspect. MegaETH, if we go back to the MegaETH featured apps, it is basically the same as any other alt L1 or even L2, in that there are launch pads, there are dexes, there are NFT trading apps, there's casinos, there's digital collectibles. It's basically the same. You could have launched MegaETH in 2021 and it would have looked exactly at home. I would question whether the market has moved on from trying to inspire this type of activity. We are really in the era right now of payments for merchant payments, fintech going crypto through stablecoins. We're in the midst of RWAs coming on chain, stocks coming on chain, 24/7 trading, price discovery when markets are closed or over the weekend, all happening on chain. We're not really seeing the widespread adoption of some of these use cases that MegaETH is positioning itself for. That said, I know Pokemon cards and phygital stuff is also popping off too. So I don't want to discount that too much too yet, but this is just one of those things that we're going to have a real thermometer about where the crypto interest is in 2026, at least for the first half, by MegaETH as a proxy. So TBD on how this is going to play out. If anyone has a fix on how to get my money out or how to get my tokens on MegaETH out into some of these apps when they're all currently on Phantom, please let me know. I'm probably screwing something up that is very obvious, but hey, you only have so much time in the day to figure out how to wrangle some of these bridges and apps, and especially on new networks. So let me know. Step into a new era of digital wealth with Nexo, the premier digital assets wealth platform. Earn interest on your digital assets, borrow against them without selling, trade a wide range of cryptocurrencies, all in one place. Nexo is now available again in the US with an evolved product suite tailored to today's market. For a limited time, new US clients can unlock 30 days of exclusive Wealth Club Premier benefits, including enhanced interest rates, reduced borrowing costs, and up to 0.5% crypto cashback on trades. Get started today at nexo.com/breakdown. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Okay, next we're going to jump into DeFi United, which is addressing the fallout of the bad debt on Aave as a result of the Kelp DAO attack. I mean, there's been plenty written on the subject already. If you do need a refresher on essentially what happened with Kelp DAO, in that there was a bunch of, not a bunch, hundreds of millions of dollars worth of a liquid staking token, RSETH, was drained from a Kelp DAO smart contract. And because it was borrowed in such a way that it was not truly collateralized, that resulted in Aave potentially having a bunch of bad debt. So a lot of DeFi operators that had exposure to that kind of contagion have kind of collected together, and also some people that weren't directly connected also have banded together to raise more than $302 million to date, much of it from DAOs and crypto businesses within the blast radius of the hack. That's enough to fully cover the April 18 exploit. This is from DL News, in which hackers affiliated with North Korea stole some $293 million in RSETH from Kelp DAO. And some of that was recovered because of an Arbitrum clawback, which is really cool. But what I will say is that, I mean, it's really been said before as well, in that this is really, I mean, they're dressing it up as a DeFi United initiative, but it is a bailout fundamentally. And it is a bailout specifically of the Ethereum DeFi space. Aave is obviously one of the biggest platforms in the Ethereum ecosystem when it comes to DeFi. If the space had truly let that bad debt work its way through Aave and end up actually affecting users at some point, it would be very hard to then inject a sizable amount of liquidity again and capital into the DeFi space to bring it back to standing from before the hack. And I'll read this quote here from Hasib Qureshi from Dragonfly. I might have to take everything back I said criticizing Ethereum, Rainbow, and unicorns, referring to the vaguely utopian and communal ethos among many prominent Ethereum developers. Sometimes rainbows and unicorns are exactly what a community needs. Very surprised this all came together through donations. I mean, there's a few things going on here. One, yes, it's amazing that all of these operators are willing to backstop these losses in order to keep everything chugging along, especially at a time, I mean, I know that some people are starting to become more bullish slowly, but I would hesitate to say that we aren't headed for more pain and bear market ahead. So to have a hack of this magnitude go unaddressed as we are maybe heading into perhaps the middle of crypto winter again, something had to be done. The cynic in me would say that a lot of the money that has been contributed was effectively, I don't know for sure, but I would presume that it is house money, in that, a lot of, it's money that was contributed in ETH that was maybe bought a long time ago and held, that is now appreciated in value. So, contributing the funds, it's not the same as reaching into your life savings and donating it for the good of DeFi. It is effectively house money. So there's that. But at the same time, we have to assume that these instances are going to get worse. There are going to be more hacks, hopefully not of a bigger magnitude. So if this bailout does formalize and does go through to the degree that it seems to be happening right now, let's just hope that there is a lot more house money to go, because I think even in the last 2 days or last day, there has been a couple more hacks and incidents on DeFi protocols. $50 million here, $10 million here. That stuff will add up. And if we are being, if we are picking and choosing which protocols and which instances we do bail out, for one, that will create disparity between people who are connected as insiders and friends within the DeFi space and the smaller protocols that are just getting off the ground. That gap will widen. But also, I have to imagine that we are just in the early innings of at least this current wave of attacks. So in a year, are we still going to have $300 million to bail out the next one? Perhaps. But, at this point, I'm a little concerned. And it is it is addressed in this piece. Let's read it here. But some members had concern. Tokedex founder Robbie Greenfield noted that it asked much of the DAO without requiring as a precondition any systemic reform to prevent the exact same failure from occurring. Other members had similar qualms. Still, Token Logic advanced the proposal to the voting stage, arguing that changes to Aave's risk management practices were a separate parallel conversation. Conditioning disbursement on deliverables in a separate workstream would introduce delays and ambiguity at a moment that requires broader industry-wide aligned action, it wrote on the forum. Voting began today. And yeah, I mean, there does need to be reform. I caught up with SEAL 911 responder and chain investigator Nick Bax earlier this week to discuss the state of DeFi cybersecurity. So if you missed that, please go back and take a look at that chat. I believe that we are very far from some kind of consensus across DeFi of best practices and all of that kind of stuff. And instead, we do seem to be relying on bailouts, which eventually I have to say that stream will run dry. And perhaps I'm underestimating just how much house money there is out there. Maybe I'm too small in my thinking, but I would hate to see another hack happen and then there be no funds left for that bailout. So let's wait and see how this goes as well. But at least for now, what is the biggest existential question hanging over DeFi seems to be being addressed by the people who are building DeFi. So there's something to be said for that. Let's take a moment to talk about Nexo. Nexo delivers a premier digital assets wealth platform designed to help clients build, manage, and preserve their wealth, earn interest on your digital assets, access crypto-backed credit without selling your holdings, trade with advanced tools, all supported by 24/7 client care. Now back in the US, Nexo offers new clients 30 days of exclusive Wealth Club Premier access. That means enhanced interest rates, reduced borrowing costs, and up to 0.5% crypto cashback on trades. Benefits typically reserved for Wealth Club members and private clients. Nexo is also expanding its global presence, becoming the official crypto partner of Tennis Australia, the organisation behind the Australian Open, and the digital asset partner of the Audi Revolut Formula One team. If you're ready to approach digital assets with a more structured wealth strategy, visit nexo.com/breakdown to get started. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Okay, what have we got next? We have Meta enabling USDC stablecoin payouts for certain creators, I believe just in Colombia and the Philippines for now. Yeah. Stablecoin payouts are currently available to select creators in Colombia and the Philippines. And this is just one of those things. I mean, it's the same kind of thing as DoorDash partnering with Tempo to allow partners and merchants and stuff like that to accept payment in stablecoins. Meta is doing it not on Tempo. They're doing it on Solana and Polygon, which I find cooler. I mean, if you caught my little rant last week, my 3-pronged test for figuring out if something is interesting within crypto, at least Solana and Polygon, they're a little bit more permissionless, let's say, than Tempo. I understand that not everybody can just easily become a validator on either network. Solana, because there's quite high demands for resources, internet connection, machines. You basically need a server grade equipment and internet connection in order to become a Solana validator, and almost the same as Polygon as well. At least you can gain financial exposure to at least the token on those networks. But anyway, what I will say, I mean, I don't just want to rally against stablecoins all the time, because stablecoins, obviously they're serving a purpose, and Meta here is doing something to at least boost the adoption of stablecoins in certain parts of the world. What I will say, and I hate to just beat the drum again, is that 2015, 2016, 2017, going into 2020 and 2021, we saw a lot of massive companies and corporations start accepting crypto payments. I mean, Tesla accepting Bitcoin was probably the most high profile one. You had the Mavericks accepting Dogecoin, and you had a lot of other companies as well start accepting crypto payments, and it was usually through third-party payment processors like BitPay. So some big company would make a big deal that they would be accepting crypto payments, but when you look closely at what was happening, it would the money would actually go to BitPay, and then BitPay would sell, in most cases, sell the crypto in order to get fiat, and then give the fiat to the company that is supposedly accepting crypto payments. So there's some squirrely language that would go on. So there's that, and I just get the same vibe from a lot of these initiatives to accept stablecoin payments, in that there is the option there, but one, do the users even want to use stablecoins? I would hope that they do, especially if it makes them save money. I would also worry, though, that a lot of those savings would effectively be null and void, to the point that they would have to sell the USDC for fiat on the other side in order to pay for stuff in the real world, like pay for rent and all that kind of stuff, which would introduce more forex fees and exit and off ramp fees that would essentially cancel out whatever savings are available with the USDC and stable coins as well. So I'm not too. A lot of people talk about the efficiencies that are saved, but I'm not too sure how that really works in the real world when someone actually needs to use fiat to pay for rent or food. The other thing that I will say is that I am still not sure how this is meant to, like, it's to me it's trickle down economics, but the crypto version of it, in that, okay, we're bringing a lot of people onto stablecoin rails. The fees collected by these stablecoin payments by the chains validators are relatively small, and the cheaper chains become, those fees are only going to become smaller. So there is essentially a race to the bottom in terms of serving stablecoin rails to the masses. And again, it's one of these things that we are asked to believe that the, there is a logical wall here that I am beating my head against, because USDC, stable coins in general, they are meant to be a substitute for money. So we should not be thinking of stable coins as quote unquote crypto. They are dollar substitutes. And at that point, if a merchant or creator receives USDC, that is money to them. That is income. That is not an investment. So we are still left in the original problem in terms of inspiring adoption of crypto and investment in crypto and bringing in liquidity, in that if someone in Colombia or the Philippines receives USDC from Meta for what they're doing on the platform, will that person want to go and buy coins? I'm not too sure. That's their income. We still need to inspire and give those people a reason to then go and invest that money within the crypto space. In order for any value to accrue within the crypto ecosystem overall, I have to imagine that people earning money, earning income in stablecoins, that will go to their living expenses. That will go to, again, paying rent, buying groceries, saving. I still find it hard to believe that there will be a large number of people that are willing to go and then convert that USDC into Bitcoin, Ether, Solana, and pump the coins. So at that point, I'm not too sure what we are meant to expect from initiatives like Meta and stablecoins. Perhaps I'm missing something. If I'm missing something, yell at me on Twitter. Reach out to me and tell me what I'm missing, because I am still banging my head against this wall. And we also have to remember that we have done tips, content, we've done tips and everything like that already. I mean, people forget that Twitter in 2020, 2021 enabled lightning tips for content creators, and nobody really did it. I mean, you can send ether to people on Twitter. I mean, maybe they remove those functionalities, but we've done this dance before, and it hasn't exactly converted into mass adoption of crypto. So, I mean, okay, this is Meta. Meta is one of the largest tech companies in the world, and their platform is truly massive. But I am still unsure what exactly this means in terms of boosting the overall crypto ecosystem. In terms of like value accrual for the tokens that exist, let's just wait and see on that. But that's my thoughts about Meta and stablecoin payouts. Okay, next we have, some stuff about Blockworks. Blockworks has just raised at a $192 million valuation. Yeah, that's up from $135 million in May 2023. CNBC had a great write-up. Blockworks wants to become the crypto equivalent of Morningstar, how it plans to do it. So, I mean, beat ups to Mike and Jason. And for those who aren't really familiar with Blockworks in the audience, I understand that a lot of you joined this podcast through NLW, and for a while this was a CoinDesk, and now it's under Blockworks. And for the longest time, it was a media operation, media and events operation, and now that's morphed and grown into a data and research and information company. Yano really broke it down here in this article. We're so behind on data and research and information for digital assets. In traditional finance, you have Morningstar, but also like FactSet and Moody's and S&P Global Reach. Those don't exist yet for assets that are coming onto the blockchain. Blockworks is really positioning itself as a way to really eradicate the information asymmetry between protocols, teams, projects, and the investor class. And I have to believe that is something that a lot of the Bitcoiners and Bitcoin maxis that are in the audience will really vibe with, because I mean, if you're a Bitcoin maxi, and I was for the longest time as well, and I've softened my stance on that over the past half decade. And that like being a Bitcoin maxi was a catch-all way to avoid the information asymmetry of the token market, because you do not, if you're a Bitcoin maxi, you do not want to have to bother with wondering if there's unscrupulous things happening behind the scenes of the token that you're investing in, or the token that you're buying, or the network that you're using. The immaculate conception, quote unquote, of Bitcoin absolves you of the burden of having to analyze, scrutinize every protocol that comes along. That it might be interesting, but it comes from a centralized, there's a lot of issues behind the scenes in terms of centralization, a lack of disclosures, all that sort of thing. So Blockworks, through its token transparency framework and investor relations portals, is really pushing to make it much more straightforward to understand what you are buying, the functions of the token and the team behind it. So if you are still holding the crypto space at arm's length because it is just too difficult to deal with, I mean, we get it. Blockworks gets it. We are now pushing into a world where it is possible to solve those issues, and it takes an industry to do it, but it also takes initiatives like what Blockworks is trying to do in order to make there be social pressure and market pressure to operate in a space of full transparency. And I just want to applaud Blockworks for going out and championing that, and really putting their money where their mouth is in terms of making it the company mission, and very focused on solving this particular problem. And of course, this came amid a rebrand. If you're interested in the Blockworks rebrand and the ideas behind it, please go on onto Twitter and check out our Director of Creative and Brand, Reed Hannaford's articles about the design choices and what inspired the new logo and and everything else. I'm going to read some of it here. The on-chain economy generates an enormous amount of data: blocks, transactions, liquidations, flows, swaps, trades, unlocks, governance votes, bridge activity. Most of it is legible only to the people with the tools to read it, and even then only in fragments. Our job across data and software is to make that signal legible, not to simplify it, but to interpret it, to give shape to things that are by their nature hard to see. We began exploring how we might translate these themes into visual language to reflect the new Blockworks. The interpretation layer became the phrase we kept coming back to. We were drawn to images of caves, rock formations, and geological layers. Then a breakthrough came from a different metaphor entirely: sonar. Sonar is what you use where light doesn't reach. You send out a signal, wait for it to come back, and you build a picture from what returns. Instead of illuminating the surface, it maps the depth. This is the aesthetic vocabulary of things that are sensed before they are seen, which has culminated in this ultra cool cube that's constructed out of scan lines. Great optical illusion, great tie-in with Blockworks. The more you look at it, the more clear it becomes, which I think is a really great metaphor and analogy for what Blockworks is as a data and information company that is bridging the gap between the old world and the new. So please just go in and have a look at it, and yeah, hopefully that gives you a little bit of background as to what's happening behind the scenes at Blockworks as we move into the next phase of what crypto is, and what it could be. This is about it for now. I'm going to leave it there for this week. As always, reach out to me on Twitter, on email, david@blockworks.co. Talk to me about what you would like to see discussed, anything that I've missed, how you're viewing MegaETH, and whether or not you're able to jump on and have a look, or whether you're interested in it at all. I'd love to hear from you. Cool. And as always, look after yourselves. Bye.